Now then, folks, let's dive into the extract from a cash flow question. Yes, it's just a snippet, not the full drama, but there's plenty here to discuss. In this mini session, I will be discussing sections of operating and investment activities. Now, here's the thing. There are a few ways to approach cash flow questions. Some of them are quite fiddly. Think of T accounts and all that stuff. But I'll be showing you a more straightforward method. It's quick, efficient, and indeed exam friendly too. My method, you might wonder? Well, the method is pretty simple. Read the question and write the answer as you go. Simple but effective. So buckle up, stay focused, and let's crack on. This is a little bit of working that I'm going to be using. And this is where we deal with those mysterious non-cash items, depreciation and gains or losses on property, plant and equipment disposals. Lovely stuff. You would also spot a section for working capital changes in here, like inventories, receivables and payables. But the spoiler alert here is today I'm only interested in receivables only. So now the plan is simple. We will grab the opening and closing figures from the statement of financial positions and use the classic formula, opening minus closing figures. If the results are positive, it is an inflow. If it is negative, then this would represent an outflow. That's it. Just one twist. Payables work the opposite way. Positive means outflow and negative means inflow. This is where the action shifts to investment activities. The focus here is on property, plant and equipment, acquisition and disposals. To figure it all, we will be needing separate working for property, plant and equipment and depreciations, just like the one that you see on the screen. All right, let's start. First up, copy the opening and closing balances from property, plant, and equipment. Don't forget, we have got accumulated depreciation figures too. We need to watch those movements carefully. Time to set up some workings for accumulated depreciation. Let's keep this tidy and very, very precise as well. And here you will find all these opening and closing balances. At this point in time, I'm not thinking, I'm just copying the numbers in their right places. That's all. Now, on to receivables. Let's plug the opening and closing balances into the working capital section. Here's a little bit of an exam insight for you. The pro forma in the ICAW exams does not give you handy headings like the one that you see on the screen. But I'm using them here so you can clearly see the type and the nature of each transaction. It's all about adding a little bit of clarity, folks. And trust me, when you bring order to your thinking, your response time would improve dramatically in the exam. Let's tackle note number 2. Fixes sold for $32,000. Great. Usually there is a backstory to proceeds. For now, let's record that as cash inflow in the investment activity section. The examiner might have some tricks up their sleeves, but we will deal with those as they come. While we are here, let's quickly work out the gain or loss on the disposal. So the disposal proceeds, 32,000, carrying amount, 45,000, and there you go. You have a loss. You have a loss of 13,000 pounds. Now that 32,000, based on our assumption, that is going to go to the investment activity as a positive cash inflow. And that 13,000 is a non-cash item, and that is that reconciliation item which will be added to profit before tax figure. Now, we also need to adjust the cost workings to remove the cost of the fixtures, while we also need to update the accumulated depreciation working to exclude the depreciation on the disposed fixtures. But there's a little bit of trick here. Is that depreciation given to us? Of course not. But we don't need to panic. we can work this out by comparing the carrying amount with the cost. And I'll show you. So disposal, the cost disposal is £85,000. I'm removing that from the opening balance, and the accumulated depreciation on the disposed of asset is 85,000 minus 45,000, which is giving me 40,000. £40,000 is representing the accumulated depreciation on disposed of asset. Now, what do you think? Does that make any sense to you? Let me know in the comments. Now, here's the assumptions. All disposal proceeds are cash, or at least for now. But let me just say this. If the examiner suddenly flips the script, I'm ready, and you should be too. Adaptability is the key. For now, though, we will move forward with what's in front of us. So keep on moving. And I'm locking my answer at this point in time with £32,000. The loss on the disposal. The loss on the disposal, yes, it's a negative number in the profit and loss account, but don't let that trip you up. In reconciliation, it's a non-cash item, so we simply add that back. Simple as that. Here comes the curveball from note number 8. The examiner says that receivables include not just the usual suspects, such as the usual trade receivables, but also receivables from the disposal of that fixture. Now we have to do two things. Task number 1 is going to be adjusting the closing balance of receivable. The new balance would be 375, and I will show you this. So this was my previous working, 315 minus 390, and I'm going to remove that £15,000, and there you go, you got 375. Now, task 2. Here's where we correct our assumption about the proceeds being fully in cash. Turns out 15,000 of it is not. So we adjust the disposal proceeds. 32,000 minus 15,000 is equal to 17,000. Here is the beauty of accounting. When you make a mistake, you do not panic, you confront it, confess it, and correct it. That's all there is to it. That's it, folks. Nothing left to do in this question. Let's close our workings now. Property, plant and equipment. The expected closing balance 419, but the actual statement of financial position figure is 620. What about that difference? Well, the difference, it is the acquisition of property, plant and equipment for cash. Record that as an investment activity outflow. What about the accumulated depreciation? Expected closing balance 250. Actual closing balance 340. The increase reflects depreciation charge for the year. A non-cash item, of course, which will be added back to profit before tax figure. Here's the result. Receivables have increased, representing an outflow of £60,000. And here's that adding back of the depreciation charge of £90,000. Investment cash outflows goes here. And there you have it, done and dusted. Pause the video and take a good look at the full working on one slide. Now, a word of advice as you prepare for your exam next week. Trust yourself, trust your techniques. The examiner might throw in distractions and curveballs, but if you stick to your method, you will definitely navigate through with confidence. Accounting isn't about being perfect all the time. It's about having it with a little bit of a method and staying calm under any pressure. I hope you found this useful, and I wish you the very best for your exams next week. Go smash it.